everyone, welcome back to our Accounting 210. In this video, we continue with Chapter 11, Standard Costs, and then we are focusing on learning objective for compute and evaluate the variable manufacturing overhead variance. So now let's get started. Okay? This is a learning objective file. Okay, so now let's get started. Variable manufacturing overhead. Before we start, I want to give you a general idea. So it's kind of like the utility is manufacturing overhead, but it's variable. So it's very similar with the direct material and direct labor because all of them, they are variable costs. But because for the overhead, right, we cannot really observe, we cannot really trace, so we only allocate. Remember in chapter 3, we learned the allocation of manufacturing overhead. Since, for the overhead, it's a sum of different things. It's not for the direct material, hey, it's direct material. For the direct labor, it's direct labor. But for the manufacturing overhead, it's a sum of different things, right? It can be the indirect material, right? So can be variable. Indirect material can be indirect labor, can be variable. So because of that, it is kind of hard to know which item causes the variance. So what I'm trying to say is for the variable manufacturing overhead variance, we focus on the calculation. So you do not need to worry too much about the interpretation. You should know the interpretation of direct material and direct labor, but you do not need to know the detailed interpretation of a variable manufacturing overhead variance. Okay, now let's get started. As I say, the calculation is very similar with the direct labor and the direct material because they are all variable costs. So the way I put it is I put actual, standard, and then standard. So the first variable is units, the second variable is dollar amount. And then we say the difference for the first two will be the dollar amount. For the variable manufacturing overhead, we also call it a rate variance. But in order to be different from the labor, we call it a variable manufacturing overhead rate variance. And then for the second part, we also call variable manufacturing overhead efficiency variance. Okay, efficiency variance. So very similar. You can see even from the name, it's very similar with our direct labor variance. Okay. So you allocate a variable manufacturing overhead using machine hours. The hours refer to the machine hour. Now we focus on the machine hour. It's not the labor hour, but we also use hours. That's the reason we carry rate and efficiency. Okay, number of cases produced 31,000, and then standard variable manufacturing overhead rate is $25 per machine hour, and then standard hour required per case is 0.1 machine hour. Actual machine hours, we use the 3,000 machine hours. Actual variable manufacturing overhead cost, it told us totally is 85,200. So you can put a number there, but we also want to break it down to the units, to the dollar amount, to the dollar amount, and then to the quantity amount. So totally, the variable manufacturing overhead cost is 85,200, but it's over 3,000 machine hours. So each machine hour is $28.4 actually. So now we put all the numbers, right? We said for the actual machine hour, it's 3,000 hours. Do me a favor, when you put 3,000 machine hours there, put 3,000 machine hour in the middle because they use the same actual machine hour. And then now we tell me different things. We said for the actual, we actually the actual variable manufacturing overhead rate is $28.4, right? But we said based on the standard, it should be $25. It should be $25. Should be $25. Do me a favor, when you put $25 there, put $25 here, put $25 here. And then now we kind of first go to the first variance, manufacturing overhead rate variance. Okay, before we do any calculation, I want to ask you a question. Do you have a favorable or unfavorable results? Based on the standard, the allocation rate is $25 for 1 machine hour, but your actual cost is $28.4 for 1 machine hour. So you should know for 1 machine hour, your actual cost is $3.4 more than the standard. So we have an unfavorable manufacturing overhead rate variance, and the difference is $10,200. So if you do the calculation, I'm not going to do the calculation. You should be able to do calculation now. So this is our unfavorable variable manufacturing overhead rate variance. And now we go to do our efficiency variance. How do we get our standard cost allocated? We need to get the total hours, right? Total machine hours. We need to get the total machine hours. We said we totally produced 31,000 units. And based on our standard, we need to go back to our menu based on the standard. We should use 0.1 machine hour. For 1 unit. We should use 0.1 machine hour for 1 unit. We totally produced 31,000 units. So based on the standard, we should have used 3,100 machine hour. But actually, we only used 3,000 machine hours. Without doing any calculation, you should know, oh, we have a favorable efficiency variance. You can see it's very similar with the direct labor, that variance, very similar. And then if you do all the calculation, this variance is $2,500 favorable. So your efficiency variance is $2,500 favorable results. Okay, as I said, your focus is on the calculation part. We do not worry too much about the interpretation, but I go through this paragraph with you. The overhead rate variance tells you whether or not you spend more or less on the variable overhead than expected given the actual machine hours run. So the budget is for 1 machine hour, we allocate $25, but actually we allocate $28.4. So for $1, we allocate more. For 1 machine hour, we allocate more dollar. It's also sometimes called spending variance, but in the exam, I will tell you it's just called as the rate variance. The efficiency is directly tied to the efficiency, right? How many machine hours actually you used. Based on the standard, we thought we will use 3,100 machine hours, but actually we only used 3,000 machine hours, so we are very efficient. It tells us it's due to using more or less machine hours. And then we also go to production supervisor. I think if you read your textbook, it tells you the overhead, manufacturing overhead is a sum of different items. So we cannot really know which item is because of the indirect material or indirect labor or other manufacturing overhead. We cannot tell the direct specific reason. So you do not worry too much on the interpretation part. Okay, in the next video, we will practice one question for the manufacturing overhead variance, and then focus on the calculation, read textbook, a little bit about the interpretation. That's all you need for this part. I'll see you in the next video. Thank you.